Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as you all know, today is Thursday, so we'll be expecting quite a lot of events in the market. And before I begin the session, I would like to do a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. Awesome. So there's quite a lot of things happening. Hello, J Squad, and thank you for joining the session. So first things first, we'll begin with the economic calendar, see what has been happening and what we're expecting for the day. So clearly, we have had the better part of the week. We saw Canadian CPI coming in stronger than expected. US retail sales indicating that inflation might be a little bit persistent. And now we are facing even more data this Thursday. And there's a lot that has already happened early in the morning. So one of the key things we saw yesterday was Bank of England Governor Andrew Bailey issuing a speech and basically saying that inflation in the UK is becoming a little bit more entrenched. They are seeing second order effects of high inflation, and at the same time, there is a high risk of a wage price spiral. So in a wage price spiral is basically an environment where inflation is high. So employees within an economy tend to request for a higher income or a pay rise in order to continue honoring their bills and living a similar lifestyle. And in that case, employers honor that and they give them more salaries. But as a result of that, they also have to hike their products. And you see this wave happening and inflation becomes entrenched where prices keep on going higher. So he basically said that there is a necessity for the Bank of England to continue hiking interest rates. So there's that expectation that on the next meeting, the Bank of England will continue hiking interest rates in order to address the high inflation problem. So early in the morning, we heard news coming from New Zealand. Producer price index quarter over quarter was up 0.2%, and this was way below expectations. And also for PPI output, or producer price index output, it was up 0.3%, also way below expectations of 0.8%. So Japanese trade balance improved slightly to negative 1.02 trillion compared to the previous reading of 1.21. We were expecting negative 1.08. So meaning that export-import business is not really doing well for the Japanese economy. So the key highlight this morning was jobs data coming in from Australia, where unemployment rose from 3.5% to 3.7%. And also, investors were expecting that the Australian economy created 24.8 thousand jobs in the month of April, but this missed expectations. In fact, the economy lost jobs by 4.3K. So this was bad news for Australia, and we'll be looking at the reaction shortly. So today, we expect a thin market in the Eurozone as we experience a series of bank holidays. So in the London session, we don't expect a lot of volatility as it's a bank holiday in Switzerland, in France, as well as in Germany. So 10:45 a.m., this is a couple of minutes ago, we had a speech by MPC member Bill. Sadly, I've not been able to follow this. So the next news outcome will be the monetary policy report hearings from the UK at 12:15 p.m. So later on in the day, we'll be looking at the National House Pricing Index in Canada. This will be at 3:30 p.m. before we look at the US unemployment claims, which are expected to drop to 253K from a previous reading of 264K. At the same time, we'll be looking at the Philadelphia Fed Manufacturing Index. And then later on, we get two speeches from two more Fed members. That is member Jefferson as well as member Barr. Then later on, we see additional home data this will be existing home sales, which are expected to come in at 4.3 million compared to 4.44 in the previous month. So you'll get the CB reading index at 5 p.m. Another speech from FOMC member Logan before we look at the Canadian Bank of Canada Financial System Review, natural gas storage, and also a speech from the Governor of the Bank of Canada, Mark Lem, at 6 p.m. So as you can see, we don't expect out of news announcements. And as we head into tomorrow, it's also a largely quiet day, with the key highlight being Canadian retail sales, and also the Fed Chair, Jerome Powell, issuing a speech at 6 p.m. And towards the end of the week, we get a speech by ECB President Lagarde at 10 p.m. on Friday. So with that in mind, we know that the key development that investors are really concerned about right now is the US debt ceiling negotiations. So we know that President Biden cut short his trip in Asia in order for him to negotiate the debt ceiling with House Speaker Kevin McCarthy. So far, the negotiations are getting more advanced, and there's a good chance we could be seeing the debt ceiling being raised yet again. So if this happens, then it's expected to be very positive for equities. So far, we are already seeing speculation into that. So yesterday, the US equities were very bullish. So it's in accordance to the speculation that this will be happening towards the end of the week. So whenever there's a debt ceiling hike, then we tend to see a similar thing happening. So there's an interesting post I just made earlier this morning. So I'll be sharing this with you guys. So just a moment. Awesome. So this is the post. As you can see, it's a nice image of the cash at the treasury, which gets depicted as the ex-date looms. So the ex-date is basically a description of the date upon which the US would default on its obligations, or basically meaning that the bank or the US will be bankrupt and will not be able to honor its debts. So the current balance with the US Fed is about $296 billion. So if the Fed doesn't basically increase the debt limit, then the US risks default, and this would be very chaotic. So the US president is currently negotiating with Congress to make sure that a law is passed in order to expand the debt limit. So the last times this happened was during early 2022, during the beginning of COVID. So when the US was out of cash, then they raised the debt ceiling. And then in the second one, still in 2022, when the US was out of cash, they basically suspended the debt limit law for a while. So this happened twice. And once it happened, then in both instances, we saw US equities rally. And now we are on the verge of another debt ceiling raise. So if it happens, then there's a good chance we'll be seeing the US equities rally, and speculations on the same have already begun. So now looking at the charts and trying to understand what has been happening, if you look at the US Tech 100, you can see the big rally that happened for the last couple of days. So today being Thursday, you can see on Monday, it was a good rally. Tuesday, a continuation of the same. Yesterday, Wednesday, continuation of the same. And today, it seems to be going even higher as the market price in a stronger equity market as a result of the lifting of the debt ceiling. And also, we are looking at a record resistance level that we last saw in August, the 15th of August. So once the NASDAQ breaks this high, then we will be trading at a 12-year high. And that's very important for people who are speculating for a bull market rally. So for now, it seems like the stocks are extremely bullish with the NASDAQ reading the rally. Remember, it's up over 25% over the year. Whereas the SP 500 has also been doing well. but it's not as bullish as these other charts. So as you can see from my trend lines here on the 4-hour chart, it seems like the S&P 500 is trading within a diamond formation. So a diamond formation is where you see the market trading along two trend lines expanding, and once it gets to the center of the diamond, then it starts contracting, and now we are testing the upper limit. So a breakout to the upper side would imply a bullish momentum and a continuation of the original trend. And it seems like the market is attempting to do that right now. So there is a good chance we'll be seeing some further upside happening in the S&P 500. And also for the US 30 or the Dow Jones, it seems to be doing something similar. Though it's the weakest, it's up under 1% for the year, that is year to date, whereas the S&P 500 is up around 13%. So clearly, we are seeing the market breaking these resistance levels as it cruises higher. So this is very clear for everyone that the Dow is currently breaking the upper trend line, and there is a good chance we'll be seeing even higher prices. So with that being mentioned, I expect stocks to be bullish for the day. And as for gold, we are seeing a reversal. So remember, whenever we see this change in market sentiment, from a period where investors are largely risk off, and now we are seeing investors being risk on, that is buying more risky stuff such as equities, then you tend to see the reversal in gold. So for gold, if you are to zoom out on the daily chart, you notice that it's a major resistance level that the market has tested 3 times, and now we are coming off those highs of around 2070. So right now, if you look at the gold price chart, then you'd notice that it has been falling consecutively for 3 days now, and there is a good chance we'll be seeing some further downside. So while some of the biggest drops happened on Tuesday, yesterday it was a struggle to go down, but today it seems like a straightforward drop. So we could be expecting to see some further downside happening in gold prices. So we are currently testing a major support level at 1974. So a further break below that could see us even testing lower prices. So in this case, a projection of the previous support line would imply that gold could drop to around 1951 if it manages to break the 1974 level successfully. So as for the dollar index, it's still cruising higher on bets that the Fed would hike interest rates based on the oncoming data. So from the data we are seeing from the US economy, ranging from manufacturing indices, we have seen the New York manufacturing index. Now we are waiting for Philadelphia manufacturing index. All that data is indicating that the Fed may also have to go for a 25 basis point hike on the next meeting. However, there's other speculation, basically implying that the Fed might not go for the rate hike. So for instance, if you look at the CMA Group 30-day Fed futures prices, then they're indicating a 72% chance that the Fed will keep rates level at 5 to 5.25%. However, if they decide to go for a rate hike, which there is a 27% likelihood, then in that case, it basically implies a much stronger dollar. So from the current number of speeches that we have been seeing from several FOMC members, then there's an indication that they are looking to walk the path until they get to 2% target. And the only way to do that is to keep hiking interest rates. So as you can see, this is the 72% chance that the Fed will go for a zero rate hike, and also 27% chance that the Fed will go for a 25 basis points rate hike. So that being mentioned, there is more content on the majors. So as the dollar keeps on strengthening, this is the dollar index, then we are seeing the opposite effects in the majors, where if it's a pound USD, it's consistently moving downwards. So if I was to clear my chart here, remove all this, then you can see that the market is consistently forming lower highs and lower lows. And from the beginning of the day, we have seen the pound really weak against the dollar and pushing down even lower. So yesterday's low might be a good intraday target. So as for New Zealand USD, it has really struggled to break above this area here. You can see the long upper tails indicating rejection of higher prices. And now we are seeing an eventual drop And our original target of 0.61831 remains a good target for New Zealand USD. So for Euro USD, it's the same case. An attempt to go up yesterday in the evening was met with more selling pressure. So now we are testing yesterday's low, and perhaps we could be seeing some further downside happening in Euro USD. So after breaking this pattern, then the base of the pattern was a long-term target, and this was 1.0787. So as for USD CAD, you can see the sharp rally that was happening before the gains were erased towards the end of the day. And for this one, I would say that a lot is changing. So it seems like a market that is currently entering what we call a triangular formation. So if you look at this trend line, and then you compare to the lower one, then this basically screams some form of consolidation. The market is neither going up or down, but the volatility or these swings are getting smaller and smaller. And might be very interesting looking for a breakout as the market progresses. So this is USD CAD one-on-one for you. So USD JPY currently cruising through resistance. So these are major resistance that has been holding for quite a period here and also here. And now what we are seeing is the market cruising through that resistance as if it's nothing, which is basically a testimony that the dollar is really strong right now. So ordinary positions on the upper side seem appropriate. However, you don't have to buy the top. So being patient and waiting for pullbacks might make more sense. So for AUD-USD, clearly, we are seeing the market attempting to break this particular resistance level, support level. So what we are seeing here is a very interesting pattern where the market is basically forming this as a major resistance trend line. And on the support side, it seems like the market has been strongly holding this level. And if I was to use a trend line to connect this low, then this low, then this low, then it seems like the market is on the verge of a breakout. So if the breakout happens, then there's a good chance we'll be seeing some further downside happening in AUD-USD currency pair. And of course, we know that the current swing hasn't reached its end. So there's these lows that have been tested before. So perhaps the market is headed for these lows as a target. So if the dollar strength continues, then you could be seeing the Australian dollar continue losing to the dollar and perhaps eventually get to 0.6573. So that's it for the day. As for UK equity index, that is the FTSE 100, seems to have bounced very well yesterday, went up, and today opened with a small gap, rallied, and now it could be headed to Monday's high. So for the Euro 50, we are seeing a very strong rally here towards the upper side, having broken out of this channel and traded within a triangle for quite a period. So if I was to identify the triangle for you, this would be it. The market basically swinging up and down, up until we had a breakout here. And now it could be headed for this particular resistance all the way up. So USD against the Chinese yuan, clearly a very strong bullish momentum. So we happen to break outside this major resistance. So this was the resistance that the market was unable to break a couple of times. So upon breaking this area, what we are seeing is an acceleration of price towards the upper side, basically implying that the dollar is really strong. And this could continue being the theme for the week, where we are seeing a very relatively strong dollar against other currencies. So that's the end of my presentation today. So I'll be checking in to see if there's any questions. When using trend line strategy, using two previous higher lows or inversely higher highs tend to give you a more precise price plots versus extrapolating it over many points. Kindly debunk this hypothesis. So the thing is, if a resistance level has been tested several times, then the higher the likelihood that that resistance level will be broken. So same case applies to support. If a support level has been tested 1, 2, 3, 4, 5, 6 times, then it means that price is really persistent in testing that area. And eventually it will lose power and the market will break that level. So that's one of the theory around it. So if it's just 1, 2 points, then that time has a higher probability of holding compared to a fourth, fifth, or even sixth one. So you've been bullish on gold. Has this sentiment changed? Yes, the sentiment has changed for now because we are seeing a lot of optimism happening in US equities. So the fact that there's a lot of optimism surrounding the debt ceiling, a lot of investors are going for these stocks and they are making quite a good rally, and this has the opposite effect on gold. However, it's a welcome pullback. So eventually, once we are done with the debt ceiling negotiations, then we start looking at the key factors that are actually influencing the US economy, and eventually we'll resume the bear market in equities, and gold will start rallying yet again. So for now, it seems like the clear and obvious information that the market is telling us is that gold is going down and equities are going up. But this is only temporary. Eventually, we'll be seeing the opposite movement. Was the bullish banter released yesterday? Yes, it's available. I'll be sharing a link shortly. Also, after this session, just check your YouTube FX Pesa channel. You should be able to see the new episode that was released yesterday. What can we expect on Brent oil? Brent oil has been quite silent. Haven't seen much happening. So from this particular resistance here, 77.393, you can see we traded sideways for a while, dropped, then traded sideways for a while. So if I was to use a rectangle to highlight this is sideways momentum. This is market trading in a range. And also this is the market trading in a range, and then getting back to the same range as before. So now you're back into the previous range here. So it's not a very clear directional movement. So for now, I'm waiting until you have clear directional momentum from Brent oil. So for now, it's just the market moving sideways, directionless until we have the next set of momentum. So based on today's news prediction, what could be the next move on USD pairs? So I expect the dollar to remain strong for the rest of the week as we continue seeing expectations of another rate hike. So we'll be seeing a couple of speeches. As you have identified, we'll be seeing 3 speeches from FOMC members. So if you need a stronger perspective on what the Fed is headed to do next, then it might make sense to listen to those speeches happening today. So BTC has what we call a very strong correlation with equities. So we could see it pumping this week in correlation with the NASDAQ and the S&P 500. So thank you very much, guys. Thank you for your time, and I hope to see you on the next one.